How are you doing today? How has been trading? You're welcome to today's session. So we'll go straight to business. Let's start with Australian dollar USD. Like I told you guys during the weekly market outlook session, that my bias on Australian dollar USD is bullish. But yesterday it was strongly bearish. Okay, it was bearish yesterday. Let's start with the daily time frame. So you can see yesterday, what they did yesterday was to clear liquidity at this previous low. Okay, they clear liquidity at this previous low because a lot of stop loss orders were at this level and also at this level, so they had to clear liquidity. So what I'm waiting for now is for a bullish reversal pattern to form, either on a daily time frame or 4-hour time frame. That's what I'm waiting for. I'm waiting for a bullish reversal pattern to form on a daily or 4-hour time frame. Let's check 4-hour. So you could see yesterday, you can see this is a bullish reversal pattern. Can you see this? This is an hammer, but this is a bearish hammer. Now, after the formation of a bearish hammer, you are expected to wait for the next candle to close bullish. And you can see the candle that closed after this hammer is a bearish candle, which looks like an inverted hammer. Okay, so we have to wait for this candle to close. If this 4-hour candle, the current 4-hour candle, closes bullish, then we should consider buying Australian dollar USD. That is my take on Australian dollar USD. So what I'm waiting for is for this bullish candle, this candle to close bullish before I buy. But let's go down to 1 hour and see what's happening on 1 hour. So you can see on 1 hour also, we've had several bullish reversal pattern here. You can see we had an hammer here, we had a spinning top, we had an hammer. So we've had several bullish reversal pattern here, indicating that there's a probability for price to go up from this point. Okay, and as you can see, a resistance has been formed, has been created, right? This is the resistance that was created after the formation of these reversal patterns. So don't just wait for a bullish candle to close, for the 4-hour candle to close bullish. Preferably, you should wait. Okay, consider buying above this resistance that was created. Okay, consider buying above this resistance that was created. I think what is playing out now in the market is that they want to clear stop losses. There are a lot of retail traders that have been executing buy now. Okay, and that is what they are doing right now. They want to clear stop losses at this previous low. That's what is playing out. But if they're able to push price up and close above this resistance, you know that we have more bulls in the market. You know that demand is higher than supply. And when demand is higher than supply, you should go for a buy. That is my take on Australian dollar USD. I believe you can hear me. If you can hear me, drop comments. Drop comments. If there's any pair you want us to analyze together, please drop it in the comment section. Okay, let's move to the next pair. The next pair would be Euro Australian dollar. My bias on Euro Australian dollar is bearish. I'm looking for a sell opportunity on Australian dollar. Let's start with the daily. So yesterday was strongly bullish, and today it's been bullish since the open of the market. And I think what is playing out is that they want to clear liquidity at this previous high. Okay, they want to clear liquidity at this previous high. Okay, so what I'm looking out for is a bullish reversal, sorry, bearish reversal pattern to form. Okay, that's what I'm looking out for. As you can see, the market is currently trading at equilibrium above level 50. So price is currently at a discount, sorry, a premium level. It's currently at a premium level. So what we need to wait for is a bearish reversal pattern to form at a premium level. That is what we need to wait for before we go bearish on Euro Australian dollar. That is my take on Euro Australian dollar. I wouldn't advise that you buy Euro Australian dollar at the current market price. You can see since the open of markets, the Euro Aussie has been bullish. You can see the Monday candle. So the market opened at this price, 1.6443, and it's currently trading at 1.6558. That's about 115 pips. 115 pips. So if you had not entered buy from this point, buying at the current market price is at a higher risk. If at all you're considering buying, you should wait for price to pull back Wait for price to pull back before you buy. You can't buy at the current market price because the risk will be too high. And you can see on 4 hour, you see how yesterday candle closed. Okay, this was first candle for today's market. No, second candle for today's market, right? Yeah, today is 16. This is the second candle for today's market, and you can see it's a doji, right? It's a doji. So after the formation of this doji, we wait for the next candle to close bearish before we sell. So what is playing out now? They know a lot of retail traders would have executed sell after the formation of this doji. Okay, they know a lot of retail traders would have what? Executed sell. So what they are trying to do now is to clear liquidity, clear their stop losses. Most of them will have their stop loss at this high of this candle or a few pips above that high. So what is playing out now? They're trying to clear their stop losses. Once they've achieved that, look out for a bearish reversal pattern. Okay, you look out for a bearish reversal pattern and execute a sell trade. That is my take on Euro Australian dollar. My bias on Euro Australian dollar still remains bearish, still bearish. Okay, let's move to the next pair. If there's any pair you want us to analyze together, please drop it in the comments section. Okay, in the next 15-20 minutes, we'll be done with this class. So if you have any question or any pair you want us to analyze, please drop it in the comment section. Let's look at GU. So GU, I think GU is set for buy. Okay, you can see the pattern we have on GU, but let's start with the daily. So you can see how yesterday candle closed. You can see it closed as an inverted hammer, and after the formation of that inverted hammer, what would retail traders do? A lot of retail traders would have executed buy after the formation of this inverted hammer. And where would they set their stop loss? Their stop loss would be the low of this inverted hammer or the low of this bearish candlestick that formed before the inverted hammer. So what they've done this morning is to clear liquidity, all the stop losses. That's what they've done this morning. And you can see if you go down to 4 hour, you can see the pattern we have on 4 hour. This is a bullish reversal pattern. They've cleared liquidity, and here we have a bullish reversal pattern. This is a spinning bottom. Okay, so this is a buy setup on GU. This is a buy setup on GU. So I'm expecting GU to pull back to fill this fair value gap that was created here, to fill this void. That's my expectation on GU. So if I want to sell GU, I will consider selling at premium level. Prices are different right now, so I want to see price pull back to premium before selling GU. But I'm going to take a buy on GU. Okay, I want to buy to a premium level before considering selling. So my bias on GU still remains bullish. I'm still bullish this week. I'm bullish on GU. Okay, so that's my take. Let's just see what's happening on 1 hour. So this is 1 hour. So what we need to do is identify a fair value gap. I believe a fair value gap has been created on 15 minutes or 5 minutes time frame. Let's go to 15 minutes. Okay, so you can see this fair value gap that was created. So it's likely they might want to push price back to fill this fair value gap. Okay, so if at all you're considering selling, your stop loss must be below the low of this candle. Your stop loss should be below the low of this candle. Okay, with what I have here, I think GU is set for buy. GU is set for buy. You cannot sell GU with the current pattern we have here. I think there was a shift in market structure at this point. There was a shift in market structure at this point, and after a shift in market structure, you should wait for price to pull back to fill the fair value gap that was created, which is this, before you buy. Okay, but like I said, pullbacks are probability. It's not certain that price might pull back there. So instead of waiting for price to pull back, though if you wait for price to pull back to this level, your risk will be less. But if you execute the buy right now, your stop loss will be, let's say 15 pips below this, the low of this candle, which will be 2407 minus 15. That should be around 2392. Yeah, I think, yeah, 2392. So your stop loss will be 2392, and you are entering at 2449. That's about 40 pip or 50 pip risk, which I think for me it's okay. 50 pip risk is okay for 80 to 100 pip profit. It's a good one. But if you want to wait, you could wait. But like I said, if price doesn't pull back to this zone, you're going to miss this move. So it's better you go in. If you're trading with good lot size, let's say lot size above 0.01, let's say you're trading with 0.02, you can go in with 0.01. Okay, you can go in at first with 0.01. If price pulls back to this zone, you execute the remaining 0.01 lot size. So if price decides to go up from this point, you will still make some profit, right? Instead of missing the move, you will still make some profit. But if you're waiting for price to pull back to this zone, if that does not happen, you're going to miss that move. So you should go in with small lot size. And if price pulls back to this zone, you go in with more lot size. I hope that is clear. I hope that is clear. Okay, we'll look at gold. Okay, we'll look at gold. Good morning, Mr. Theophilus. Good morning, Mr. Abraham. Okay, so let's look at gold. Let's look at gold. After gold, we'll look at one more pair, then we'll end today's session because I'm supposed to be in a session. I'm supposed to be in a meeting right now, but I just have to be here. Just have to ensure that this this class holds, this meeting holds. I'm supposed to be in the meeting. The meeting has started. Okay. Okay. Gold. Gold, like I said, it is still bullish. My bias on gold is still bullish. There's a high probability they're going to hunt for the stop losses at this level because a lot of retail traders would have executed sell after the formation of this shooting star. Most retail traders would have executed sell and their stop loss will be at this level. So there's a high probability they're going to hunt for the stop losses at this level. If you join the weekly market outlook session, I told you guys you can see these supports that I drew unless this support is broken, gold is still bullish. So you can see what happened yesterday. What they did was to test this support level. Can you see it? And immediately they tested that level, there was a strong rejection from that level. If you go to lower time frame, you see it. Can you see it? There was a strong rejection from that level. And what pattern do we have here? This is a bullish reversal pattern. This is an hammer. This is what an hammer. So I think this bearish move that we've seen so far, it could be what they're trying to do is just to fill this fair value gap that was created on 4 hour. Okay, this fair value gap that was created on 4 hour. I think that's what they're trying to do. They just want that gap. But if you go down to 1 hour, I believe we still have a fair value gap below this 4 hour fair value gap. Let's go to 1 hour. So on 1 hour also we have a fair value gap here. Okay, a fair value gap was created here. You can see this could be the reason price didn't respect the 4 hour fair value gap. You can see because there's still a fair value gap on 1 hour that needs to be filled. Okay, and I think we still have that we had a little fair value gap here. We had a little fair value gap here. Can you see? Yeah. So if you want to buy gold, this will be your target. This will be your first target on gold, and your stop loss must be below this fair value gap. Okay, your stop loss must be below this fair value gap. So let's say you are buying gold from the current market price, which is 2371.0, and you are setting your stop loss at this level, 23451. That's about 237. That's about 300 and something pips. 300 and something pip. So the risk is very high. If you decide to use 60, 70, 80 pips, they can easily hunt for your stop loss because that 60, 70 pips is in between these fair value gaps. And there's a possibility that they might still want to come and fill these gaps before going up. So you cannot use 60, 70 pips. If you use that, they can just hunt for it. Okay, so at first, if you are taking this trade, your stop loss must be as high as 200 to 300 pips. And if you are buying from this point, at least you make close to, if not up to 800 pips from this point. It should be up to 800 or close to 1,000 pips. Okay, so that's my take on gold. I am still very bullish on gold. I'm still very bullish on gold. Okay, so let's look at one more pair, then we'll end this session. If you have no questions, any question? So let's look at one of the JPY pairs. Let's look at USD JPY. Let's look at USD JPY. So my bias on USD JPY is bearish this week. My bias on USD JPY is bearish this week. So yesterday candle closed strongly bullish, and today so far it's been bullish. Okay, so it could be that they just want to clear the liquidity at this previous high. Okay, so before I jump into sell, I want to ensure that a bullish reversal pattern forms on 4 hour or 1 hour time frame. So right now the bulls are still in control. The bulls are still in control, but it will not be right to buy from this current market price. It will not be right because this is where price started going up. So if you had not bought this product, this pair at 1,000, why would you want to buy at 5,000? Doesn't make sense. So before you buy, if you're thinking the trend is still bullish, apply your Fibonacci, take it from this swing low. Not many people will be willing to buy at the current market price because they will see that it's expensive. Okay, they will see that it's expensive. So most will want to wait for price to pull back. Those who miss this first move would want to wait for price to pull back before they buy, because buying at the current market price is expensive, it's premium. So if you are considering buying, you should wait for price to at least pull back to level 50. Wait for price to pull back to level 50 before you consider buying. So when price gets to level 50, you see a bullish reversal pattern form, then you could consider buying. Okay, or you wait for price to pull back to a discount level, which will be at this area, before you consider buying. But right now, buying is very risky. You should be considering trading the pullback. So wait for a bearish reversal pattern to form on 4 hour, okay, or 1 hour time frame. So you should wait for this support to be broken before you consider selling USD JPY. This support should be broken before you consider selling USD JPY. But let's see what we have on 1 hour. On 1 hour, okay, so we have to wait for the support to be broken before we sell USD JPY. The bulls are still in control right now. They are still in control. I hope that is clear. I hope that is clear. So that will be all for this session. You have any question? Please, if this is your first time participating in this live stream, please subscribe to the channel so that anytime I come online, you get notified by Facebook, by YouTube. Okay, and if you're getting value from this stream, ensure you like the stream. Okay, any question? Any question? You have any question? Do you have any question? Is there any other pair you want us to look at? Is there any other pair? Let's look at GJ. GJ. Okay, my bias on GJ is still bearish. You can see I identified my fair value gap on GJ, and the price just tested that fair value gap. Can you see? Price just tested that fair value gap. So I expect GJ to go bearish from this point. But if this fair value gap is broken, if a candle 4 hour closes above this fair value gap, then we should expect more bullish move on GJ. But right now, I'm still bearish on GJ until this fair value gap, which is acting as a resistance, is broken. That is when I will consider buying. But this week, my bias is bearish on GBJPY. So I have no business buying GBJPY this week. Even if a candle closes above, I'm not going to buy. I'm looking for a sell because price is at premium right now. I don't want to buy premium. I only want to sell at premium. Price at premium right now. So that's the take on GG. So I appreciate you all for your participation. I need to go off now because I need to be in that meeting. Okay, I have to be in that meeting. So please, I have to leave now. I have to leave now. I wish you guys a profitable trading day. If you have any question, you have a WhatsApp number. You can send me a message on WhatsApp. And if you are not on the WhatsApp group, please request for the link to join the WhatsApp group. Request for the link. Okay. Thank you very much. We'll be meeting tomorrow. Yeah, Wednesday, same time, 10 a.m. Bye for now.